Okay. So again, we are learning about accounting information systems. As I mentioned on Monday, accounting is an information system, right? And actually, you can disregard this. It's not from our class. I just realized that that's still there. Okay. Let's see. We talked about what systems are, right? The system takes something, some sort of input, processes it, turns it into an output. That's what computers do. That's what accounting is in general, right? And so if you use computers for accounting, it works really well. Computers help you with the inputs, the processing, storage of the data, and outputs as well. So we looked at some examples. I don't need to repeat all of those. You don't have to have computers to do accounting, but it really helps, right? So most companies do have computerized accounting systems. So yeah, a lot of this is more detail than we really need to cover. Want to see if there's anything critical. Okay, so that's pretty much it for accounting information systems in general. We then talked about special journals and subsidiary ledgers. So this is pretty important. Let me check your memory on this. Why do we need special journals? What's the whole point? Why can't we just record every transaction in the general journal? It would get cluttered. It would be too much to manage. Easier to organize and find information if it's not all just being dumped into one general journal. So we have these special journals to help us keep track of the total amount of sales that we made on credit, the number of purchases we made on credit, also the cash we received or cash we dispersed, right? Those are our 4 special journals. So it just makes things more organized if we do it that way. And then we also have subsidiary ledgers, okay? So why do we have those accounts receivable and accounts payable subsidiary ledgers for every customer and every supplier? We could just have one long accounts receivable account where we put all of our accounts receivable for all customers. But again, it would be kind of unwieldy, too much information to sort through, right? So it makes sense to have a separate account for every single customer and a separate account for every single supplier. So that's why we do it. All right, and it all feeds into the general ledger. So typically at the end of the month, you would take the totals in those special journals and you would post them. All right, and then we have lots of examples, so we don't need to go through all of that. This is a good thing to remind you of. The sales journal is used for what? What do we record in the sales journal?
Sales on credit.
Sales made on credit or on account, right? Meaning the customer has not paid us. So every time we enter something into the sales journal, there was a sale, and we have to update accounts receivable because the customer owes us money, right? So it's always going to have those 2 accounts. The purchases journal, what do we record there? Purchases on account, but purchases of what?
Inventory.
Inventory. Thank you, Julian. That's correct. And so everything we record in the purchases journal is going to have a purchase. Either it's going to get recorded as a debit to merchandise inventory if we're using the perpetual method, or a debit to purchases if we're using the periodic method. Okay. But either way, we'll debit either purchases or merchandise inventory, and we will credit accounts payable. Nice and simple. Now, cash disbursements and cash receipts get a little more complex. With cash disbursements, we're always crediting cash as it's being dispersed and it's going down. But what we debit depends on where we got the cash, right? Or where we're paying the cash, excuse me. And cash receipts, we're always going to be debiting cash because it's always increasing. But what we're going to credit depends on where the cash came from. And everything that does not go into one of those four journals goes in the general journal. Okay? Now it's a little confusing, but if you get those concepts, then the rest will make sense to you, because that's the majority of the problems we're going to look at today. All right, so we saw how you can record each customer's balance in a subsidiary ledger that's just for their accounts receivable. And then you total all the customers' accounts receivable balances together to see your total accounts receivable, right? And same thing with the money that you owe to your suppliers, which we call accounts payable. And keep track of each supplier separately, how much you owe that supplier, and then total it up. All right, we did some activities here. We saw how everything from the sales journal does get recorded over to accounts in the ledger. So we know that the sales journal is for sales made on account. So there's always going to be a debit to accounts receivable and a credit to sales. So when we transfer that journal entry to accounts receivable, we go to the accounts receivable subsidiary ledger where we have a specific account for that customer, right? So we had two Baker sales and we record both of them in Baker's account. Just makes sense, right? And then the other customers we recorded in their accounts, but then we also can record the sales. So the total sales gets recorded over, I'm sorry, where is it? The total sales gets recorded to the sales account. And then the cost of goods sold and the cost and the merchandise inventory get recorded to the cost of goods sold and merchandise inventory accounts. So that everything's organized, everything gets to the right place in the ledger. Right, we did those already. Let's see how much further we got than this. Okay, just a few more slides were covered on Monday. So this is a cash receipts journal, obviously. As I mentioned, if we've received cash, we're always going to debit cash, right? So notice that there is a column for debiting cash. Interestingly, there's also a column for sales discount. Because if the reason we were paying cash is because we owed money to a supplier, and if we paid early enough to get a discount, we have to record that. So we would record it here in the cash receipts journal. And then we would record that we paid off that account receivable. Oh, I'm sorry. I'm talking backwards. In this case, the customer's paying us. My bad. So we received cash. If we gave them a discount, we record it there. They're paying off their account receivable. However, if they're paying us cash because they just made a purchase just now, then there is no account receivable. We just record it as a sale. And then there might be other times that we receive cash for different reasons. And so you see we have that option to debit other accounts. Does anybody remember what this check mark is for?
Did you post it to the journal?
Exactly, to keep track of what we've then posted over to the journal. Exactly. All right. Then we have, let's see, that was cash receipts. Okay, this is cash receipts. This is just showing how we would take. Let me look before I speak, right? Because I don't want to mess up again like I did on the last slide. Cash receipts, we got a check. Yeah, somebody's paying off their accounts receivable. So now, since this customer sent us $1,450, right? They paid off their account receivable. We then record that in their account. Okay, and we do this one. Yeah, I think we talked through this one. Oh, and then we got to this. I think that's as far as we got. Yeah, that's exactly right. And so this is where we will proceed from. Is there anything you all want clarification on? Any questions at this point? Okay. Very good. Well, then, let's see what's going on here. We have, oh, the balance from the cash receipts journal is posted to the general ledger at the end of the month. Okay, so if there were 2 transactions during the month, one, we got that $1,450 from that customer that was paying off what they owed us. And we also got a refund of $100. So we got a total of $1,550, right? So at the end of the month, from the cash receipts journal, we're going to go ahead and indicate in the cash account that we got $1,550. If we needed to see where that came from, we see it came from the cash receipts journal. Okay. If we wanted to see what this refund was from, it's from account number 615. We could pull up account number 615, which is our utilities expense account, and see that it was the utility company refunding us $100. Okay, the balance in the cash disbursements journal is also posted to the cash account. So at the end of the month, we're updating the cash account with any money that came in from the cash receipts journal and any money that went out from cash disbursements. So cash disbursement says we paid the phone company $135. And so at the end of the month, we update that to the cash account. We indicate that's coming from CPJ. That looks like a typo. Should be CDJ. Cash Disbursements Journal. Okay. All right. Purchases Journal and accounts payable. So the purchases journal, what do we record there again? Somebody other than Julian? Because he always answers this one. Purchases made on credit, right? Specifically of inventory. Okay, so in the purchases journal, we recorded here purchase order number 123 from Jones Manufacturing, and this is the supplier number we issued for Jones. We made a purchase of inventory, so we have to debit inventory, and we have to credit accounts payable. So you see, we go to accounts payable and we credit the $250, right? Everything that gets posted in a journal has to get posted to a ledger. All right, ooh, okay, we haven't done problem 5. Let's do this one. This one's pretty easy, actually. Pause the recording. Okay. You received a check from Mr. Jones for $500 for work you performed last week. Which journal would you use to record receipt of the money they owed you, and what would be recorded? Okay, so we did the work last week. We didn't get paid at that time. We would have already journalized that, revenue from last week, the accounts receivable, but now we're getting paid. Which journal would we use to record the payment we received? Which one? Cash receipts journal. Exactly. Anytime you receive cash, it's cash receipts. Good job, Susanna. And so let's think. Obviously, it would be a debit to cash. What would we credit in this transaction?
Accounts receivable.
Accounts receivable, because that's what the customer is paying off. Very good. Okay. Okay, so these are some beginning balances. This is just for reference. A bunch of transactions for reference. Okay, so let's go ahead and see how this all gets journalized. So cash receipts journal. We've got 3 different transactions. First one, we see that there was an invoice. We see that we got $915 of cash, and we credited accounts receivable. So this tells us that a customer is paying us money that they owe us, right? Same thing with January 15th. This customer paid us this much. What's different with the January 15th transaction? You can stand out to you? They got a discount. That's Sergio? Good job. Okay, exactly. They got a discount. So they must have paid within that discount window because they did not have to pay the full account receivable, right? They paid less, and the difference is the discount. Then on January 31st, this is where we are looking at a list of all the cash sales that we have for the month, and we're transferring that total here to the cash receipts journal. We could have recorded each of those cash sales separately, but again, that would have sort of cluttered up this journal. So sometimes a company will just track all of their cash sales, and then at the end of the period, journalize. Now, if we look closely here with January cash sales, there's an account number. So not sure what account that would be, I guess. I don't know. But anyways, well, there are 2 account numbers. Oh, I know what they are. I got it. Okay, so we see a debit here and a credit, right? Debit to cash, credit to sales. And that makes sense. If we made these sales and got paid cash, we would debit cash, we would credit sales. But we see there are 2 other amounts, 1,204 getting debited and credited to different accounts. What do you think those 2 accounts are? Made some sales, we already recorded the money that we got and the amount of the sale. What is this other amount in these other accounts?
The cost of goods sold.
You got it, cost of goods sold and merchandise inventory. Yes. All right, very good. Anything that's not recorded in the special journal goes in the general journal. That would include a return of merchandise, the expiration of prepaid insurance, right? Okay, then we have the sales journal. We made 2 sales, see the amount. So again, we see the amount of the sale. So also is going to get recorded to accounts receivable. But then we also see cost of goods sold and merchandise inventory in this column. So pretty straightforward. All right, cash disbursements journal. So we've got multiple reasons, right, that we might pay out cash. Obviously, the first one's rent. Second one, Dungeons and Dragons, I don't know what, D&D, must be a supplier that we're paying. And here is that supplier's account number or maybe invoice. So we can look up that supplier and see specifically what we were paying them for. Then we've got another payment to a phone company. Oh, there's the account number over there. And this looks like probably another supplier. And notice we got a discount. We must have paid within the discount window. Right, purchases journal, this would be for any purchases of inventory made on account, right? We're familiar with that already. Okay, at the end of the month, the special journal balances are posted to the general ledger, as I've told you previously. Let me zoom in on this a little bit. That's pretty small. Okay, should be easier to see. And let's see what's going on here. So the cash account. This is how much money we had at the beginning. At the end of the month, we can put our cash receipts. So from the cash receipts journal, we got $6,402. Add it to our beginning balance to get our current balance. But then from cash disbursements journal, page 18, we see how much cash we paid out. We subtract that from the previous balance to get our final balance. See how clean it is, right? Nice and clean. You can quickly see how much cash came in, how much cash went out because of these special journals that are being used. Any questions on that first cash account? Okay, let's look at accounts receivable. Now this is the master accounts receivable account, sometimes referred to it as the control account. So you don't see individual customers here. You don't see their individual transactions. Instead, you see beginning balance and accounts receivable, plus from the sales journal, a debit of $2,248. So let's think about that. Why is there a debit in accounts receivable from the sales journal? Because we made some sales and the customers didn't pay us, right? So our accounts receivable has gone up by that amount. And then from the cash receipts journal, page 122, we see how much customers have paid us towards their accounts receivable, which reduces accounts receivable, getting us to our final balance. Okay, is that all making sense so far? Okay. If this were the first day of class and you knew nothing about accounting, it would sound like I was speaking a different language, right? But you're getting familiar with these terms, so that's what it's all about. All right, prepaid insurance, the beginning of the period, we had this much. What happened on January 30? Actually, you know what? This is a typo. I was looking at this the other day and I noticed this. It's a typo. Because what happened was some of our insurance got used up. So it's being credited. So if we had $130, well, actually, no, maybe that is right. Yeah. Let's see. That is right. Not a typo. Typos in my head. Okay. So we're reducing it by $65, and that brings us to a remaining debit balance of $65. That's right. Okay. Inventory. We started with this much. We made some purchases from the purchases journal. So our inventory goes up. We return some. Remember the returns, they're recorded in the general journal, right? And so then inventory goes down by $100 because we returned it. From the cash receipts journal, 1,704. Why would we credit our inventory account? Why would that be coming from the cash receipts journal? In what situation? I'm trying to answer this myself. In what situation in the cash receipts journal would we be recording our inventory going down?
Because you record the cost of goods sold in the merchandise inventory there too.
Yes, that's it. Thank you, Jordan. Your brain is working better than mine is today. You're right. If a customer makes a purchase and they pay cash, we record it in the cash receipts journal. And then if we are doing perpetual inventory method, we have to record how much inventory we sold. And yes, that's exactly right. Merchandise inventory would go down. Now, cash disbursements journal, we also have inventory going down. Why would that be? What case would we be dispersing cash and the cost of our inventory is going down? Yeah, I'll tell you, if we're dispersing cash because we owe money on inventory that we had purchased and not paid for, and we got a discount, and we're dispersing cash, but now the cost of the merchandise is going down because of the discount. And then on the sales journal, it looks like we sold some inventory on credit. And so again, the amount of inventory goes down. Okay. Getting us to our total. And let's look at the accounts payable accounts. Okay, so we have a beginning balance. We bought some more inventory on accounts, so obviously our accounts payable goes up. Cash disbursements, page 18. Accounts payable is going down. Well, we must have made a payment to our suppliers, right? So our accounts payable goes down. What about this general journal entry here? We have our account payable going down $100. What would that be? What would we record in the general journal that would cause our accounts payable to go down? Anybody remember? We saw this a little bit earlier. A return, right? Returns would get recorded in the general journal. So if we're returning inventory, we record it in the general journal, and that brings down our accounts payable. Okay, great. So I know that that's a lot to process, but hopefully makes sense. Anyone have questions here on anything? Yes.
Are allowances also recorded in the general journal?
Yes. Allowances also, if we're getting an allowance because we're unhappy with the merchandise inventory we purchased, then yes, it would get recorded in the general journal. Good question. And yeah, we can skip a lot of this. So that's just common stock, retained earnings, sales. Let's look at the sales one here. As you know, we make a sale. Sometimes the customers pay us right away. And we would record it under cash receipts. Sometimes they don't pay us. And then we record it in the sales journal. Right? And both of those impact our total sales. Okay, sales discounts. That's just where we record all of the sales discounts that we have issued. Notice that's coming from the cash receipts journal because we do not issue a discount until the customer pays within the discount window, right? So it's only when we receive their payment that we know if they actually got the discount or not. Cost of goods sold, that's going to be updated both by the sales journal for any sales we made on credit and the cash receipts journal for any sales we made and the customer paid cash. Let's see if there's anything else of interest on this page here. Not really. That's all pretty straightforward stuff. So let's go to the next slide. Okay, so here we have 4 different customer accounts. So we see the account receivable for each customer separately. PB&J, we sold them something for $915. They paid us $915, right? So they don't owe us anything. They have a zero balance. Jones, we made a sale to them. They haven't paid us yet. How about this company, Black and White Ink? Do they owe us anything? Looks like they paid off their balance in full, right? And then no payment received from Tiny Tim. Okay, then we have our accounts payable. Here we made a purchase from a supplier, we didn't pay. We made another purchase, we didn't pay. Then we made a partial payment, right? We paid for the first purchase, but we still owe them for the second. So we can see very clearly how much we still owe the supplier. We have paid this one off in full. This one still has a balance. We did get $100 reduction to our account payable because of the refund. So we returned an item, but we still owe them the difference. Okay, so again, at the end of the period, you could take the balances of all your customer account receivables, add them up, and see what's the total amount your customers owe you. Same thing with your suppliers. Add up the total you owe to each supplier to get a total. Okay, next is career path. So before we cover that, anyone have any questions? So we've gone over accounting information systems, special journals, subsidiary ledgers. Now we'll talk about career paths. This is for folks that have an interest both in accounting and information systems. I think I mentioned on Monday, that's a really powerful combination, right? So what are some things you could do? You could do data analytics, which is huge today. There's so much demand for people that know how to manage, interpret, analyze data. Here are some examples, interesting examples. We have technology now that could tell you how many leaves are on a tree or how many cars are in a parking lot. Okay, that's data. Why would you need to know how many cars are in a parking lot? Who would benefit from that information? Do you ever use Google Maps to plan, go to the store, and it tells you how busy that location is? And it tells you what time of day they tend to be busiest? How do they know that? Well, there are satellites up there looking at how many cars are in the parking lot. That's how they can tell how busy that store is at different times of the day. Right? Pretty sophisticated use of data. Or how many leaves are on a tree might be important for climate change purposes. If the tree is losing its leaves early in the year, earlier than the normal season, that might be an issue to be aware of. So people that are able to figure out what data to gather, how to process it, how to interpret the analysis, are people who do data analysis. So if you understand accounting and you know how to work with data, a lot of opportunities there. Obviously, AI is huge today, right? If you understand how to use AI or how to develop AI would be even better, and how you can use that for accounting purposes. Very powerful combination. Data security, how to keep accounting information safe, how to incorporate blockchain. Blockchain is what? What does that mean? The technology behind cryptocurrencies. We wouldn't have cryptocurrencies if we didn't have blockchain. Now, cryptocurrencies have their pros and cons, but they are very sophisticated technological invention. Because the way they work, it's all based on these very complicated computer algorithms that let you keep track of a particular transaction. So every transaction that happens with cryptocurrency There's a permanent record that's stored on computers all over the world. Yet, the person who bought and the person who sold the crypto are anonymous. So there's a public record of the transaction, but the only way to prove that transaction was yours is if you can log into your digital wallet. Nobody else knows that, except sometimes the FBI is able to figure it out. But in general, you have privacy. So it's a very sophisticated technology, and it's actually being used by established financial institutions are now using blockchain technology to make their transactions more efficient, more secure. Forensic accounting, that's where you get to dig into the financial records and figure out how the crime was committed. And a lot of that's going to be using computers to analyze the data. Oh, we're at the summary already. Okay, so those are some ideas of some careers in accounting information systems. I would encourage you, if you're at all interested, think about that as a career choice. Of the fields that are growing, information technology is still a growing field. Accounting is still a growing field. There's a lot of demand. So I think you would be fairly safe in your career, at least for the next decade or two, if you went in any of these directions. So many other jobs are getting replaced by AI or robots or just outsourced. And I can't make any guarantees, obviously, but I would think these jobs would be around for quite some time. Any comments, any questions? All right, so let's summarize what we've learned here. We learned about accounting information systems, how we can use computers and even manual systems to manage the accounting process, which means taking inputs and turning them into outputs, right? In financial accounting, what is the primary output? What are we learning to do in this whole course? What are we trying to produce? Financial statements, exactly, right? That's the output that we're focused on. Because those statements benefit various stakeholder groups, they can look at that information and it helps them make better decisions, right? So the input would be all of the data. We process them by doing the accounting cycle, the journal, the ledger, trial balances, etc., in order to make the financial statements. Okay. We know we use special journals to keep track of certain types of transactions. So cash receipts journal, anytime we receive cash. Disbursements, anytime we disperse cash. Sales journal, anytime we make a sale on credit. Purchases journal, anytime we buy inventory on credit. We transfer the balances from these special journals to the general ledger. Anything that doesn't go in the special journals goes into the general journal. We also know anytime a customer makes a purchase and doesn't pay, we have to record it in their account, right? In the accounts receivable subsidiary ledger. Same thing, if we make a purchase of inventory and we don't pay, we record it in the accounts payable subsidiary ledger for that supplier. And then we talked about careers in accounting information systems. All right, done with chapter 7. So, how are we doing on time? It's 2 o'clock. Good, we're doing well. What we're going to do now, and I know some of you have seen it before, but it won't kill you to see it again. Our disruptive technology presentation. Because we've been talking a lot about technology, right? And these are some of the technologies that are changing entire industries because they're so revolutionary. Right? And I promise I'll make it quick. I'm not going to talk to you. Promise. Okay. So this is an example of industrial scale 3D printing. where you can print out a house or even a whole floor of a skyscraper. This is an example of the nanoscale of materials, smaller than a virus. And believe it or not, scientists have figured out how to work with things that small and actually make little tiny robots and other things at the nano level, little machines. This is vertical farming. Some crops you can grow indoors, and in doing so, control the environment completely, keep out pests, make sure the temperature's right, make sure the plant's getting the right amount of light, and that makes a lot of sense. If you can do that, in some cases, it might be not only a better quality product, but it might be cheaper than trying to grow the traditional way. Here we have a Robo Barista. Has anyone seen one of these before? Makes coffee for you. Protein folding, where scientists are experimenting with different proteins that they can make that don't exist in nature, that have certain properties that could be used for medicine and production of materials. This represents biomimicry, where you can look at something in nature like a butterfly's wings and how the color is created. Color normally is, like color here is just made by mixing chemicals together and you get a color. But with butterflies' wings, it's actually the shape. It's actually the like the texture of their wing that makes it a certain color. So understanding that, you could then use that. Has anybody seen the BMW that changes colors? It's wild. The car changes colors right in front of your eyes. Pretty neat technology. And so anyways, that's why we look to nature and see what we can learn and how we could use that. Did you know there are electronic tongues and electronic noses that can be used to detect flavors, detect certain scents? So those could be used, for example, in the wine industry. I've heard they use the electronic nose. Okay, then we get to communications. So today there are 2 billion personal computers in the world, 14 billion cell phones and laptops, 2 billion TVs, 30 million internet servers, 3,500 space satellites, and 1 million miles of undersea cable, or almost 1 million. That's a lot of communication technology in the world, right? And that was as of a couple of years ago. So we need all that communication technology because all of our devices are becoming internet capable. So many things that we own can now get online. And that is called the Internet of Things. Here we see the generations of cell phone technology from the old brick phones, which I remember. They were really expensive and kind of heavy. But anyways, to 2G, 3G, 4G, and today we have 5G technology. And to be honest with you, a lot of the 5G that I've experienced isn't necessarily that impressive, but it has the capability as they roll out better 5G service to be much, much faster than it currently is. So it keeps, with every generation, the technology gets faster. This is a brain-to-brain interface that can be used to transfer a thought from one person to another. Interesting, right? Then we get to the health category. This is an fMRI scan, or actually 3 fMRI scans that look at brain activity and see what's going on, for example, when you meditate or when you watch TV or do math. For some reason, those have similar brain activity. Or over here, what's going on in your brain if you're playing video games. We now have chips being implanted in people's brains, which is kind of scary. But if a person has seizures or dementia, and this could help them, then maybe it's a good thing. I don't want Elon Musk anywhere near my brain, but he's behind some of that technology. All right, here we have RNA technology. This is similar to DNA. This sits on top of your strands of DNA and can turn your genes on or off. And so knowing how we can manipulate that can also be helpful in medicine. In fact, Moderna and the Pfizer COVID vaccines are based on mRNA technology. Speaking of DNA, the end of our DNA strands, as we get older, starts to unravel. And that is called the telomere. So scientists are looking at that. There's some longevity scientists that are trying to figure out if we can keep the telomere from unraveling, then we stop the aging process. Because there are some creatures in nature that don't age. And maybe we can at least slow down the aging process. This represents CRISPR, which is a technology that can be used to edit DNA. So if there is a problem with your DNA, theory, it could be fixed using CRISPR. This represents the human microbiome, the microbes, the trillions and trillions of microbes that we depend on that actually can, well, microbes can be bad in some cases. You know, bacteria and viruses are sometimes bad, but there's some bacteria and viruses we absolutely need. And scientists are just really beginning to figure out how important they are and how certain things can be healed by fixing our microbiome. This represents stem cells, how you can take a cell, bring it back to its stem cell stage, which is basically like a baby cell. But once you do that, if you take a human cell and you revert it back to a baby cell, you can then turn it into any other human cell, in theory. And that means you could create organs out of a person's own cells if they needed an organ transplant. All right, computing. Here's one of the early artificial intelligence computers. This was called Watson. This was the one that competed on Jeopardy and won. This represents machine learning, how artificial intelligence can now train itself. You just give it data, it figures it out and learns on its own. This is a quantum computer, which don't get me started on quantum computers because I think they're just fascinating, but they operate on a completely different set of physics and are thousands of times faster than any other computers that are out there. Deep fake technology, which is being used to make fake videos that you might think are legit, but they're actually completely AI generated. Then we get into virtual reality. Everybody's familiar with those VR goggles, right? Well, the same technology exists in contact lenses. So you could, in theory, you could put these, well, apparently it's actually been done. You could be wearing these VR contact lenses and with your eyes closed, watch a whole movie because it's being transmitted to your contact lens. I don't know why you would do that, but you could. And then there's augmented reality that whatever you're focusing on is going to automatically look up information about that. So now you can like imagine that combined with eyeglasses. So I could be looking at you and your name pops up or your social media profile in my glasses and only I see it, right? That's called augmented reality. Okay, then we get to transportation. Believe it or not, that's an electric car. That technology's been around for over a century. But the oil companies, I think, had their way in getting us to all drive gas-powered cars, unfortunately. This is a fuel cell, hydrogen fuel cell vehicle that emits only water. So pretty clean technology. Autonomous vehicles like this autonomous Tesla semi-truck, no driver, can function completely on its own. Can even back up and get on and off the freeway on its own. Same thing here. This is a Joby plane. You know, Joby is based right here in Marina. They make these autonomous aerial vehicles where you could take a flight with no pilot. Would you do it? I think I would do it. Surveillance. We're all familiar with facial recognition. That's pretty popular, right? Has anyone been to one of these Amazon Go stores? They've got them in San Jose and San Francisco. So it's kind of cool. You scan yourself in with your Amazon app, and then you just pick up whatever you want from the shelves. And then it's got these, it's called a visual array. I don't really know how this technology works, but it's up in the ceiling and it watches you. And it watches what you took. And if you scan in your friend, it watches what they took too. And then when you leave, it automatically charges your account. So there's no cash register, there's no self-checkout, you just walk out. Kind of interesting. There's voice print technology. I've experienced this. If I call my credit union, they can tell it's me by the sound of my voice, where it authenticates who I am by my voice. I've also heard that using the sound of somebody's voice, there are certain diseases that can now be detected just from the sound of their voice. Now, this one's pretty wild, pretty science fiction, but it apparently does exist. All of these are technologies that exist, by the way. Smart dust technology. So this is dust that can pick up visual and audio information and transmit it wirelessly. So we're talking about material that just looks like dust. So you'd never even know it was there, right? Great if you're a spy. Okay, and then I already talked about crypto and the blockchain technology, so I'm not going to elaborate. That blockchain technology also brings us non-fungible tokens, or NFTs, which are these digital files that for a while people were collecting, and some were going for as much as $6 million, I heard. I never really understood why you would pay that much money for a digital file. Then the market crashed for them, and I don't think it has recovered. So probably not something you want to invest in. But then Bitcoin also crashed and then recovered, right? It was at 50,000 and it went down to like less than half. Now it's up to about 60,000. So who knows? With new technologies come new investments. So anyways, I hope you found that interesting and relevant to information technology.